watching trading day. Well, we've seen gold futures finally rise overnight, snapping that longest losing streak in almost 9 months. The precious metal slumping 28% because last year as equities rallied to record highs amid expectations the US Fed would reduce asset purchases as the economy recovered. So how long, though, can we expect this support for gold to last? For more on the commodities complex, Peter McGuire, Chief Market Strategist at MXT Global, joins us right now. Great to see you as always, Peter. Just on gold, yeah, I mean, this is interesting, isn't it? I mean, do you see this lasting, or is the downtrend going to resume for gold?
Good morning, and lovely to see you, Bridie. Well, I think one of the big things is it's had a large correction. There's no doubt I think you're going to see further downside. Probably that 1150 sort of level, I think, will offer some form of support. The other side, of course, is that the smart money has certainly jumped all over equities in the last matter of weeks, and it doesn't seem to be exhausted in any way. The way that it bounced through the US equities at 1920 for the S&P, people are now saying, every chance that you're going to see 2,000 over the summer period, and I think that's just going to take the wind out of the gold market. There's nothing really to support it.
Okay, so all this thinking that maybe there's a correction coming, there's low volatility, it's something to be worried about. You don't see that happening?
Well, so I'm not going to say it won't happen, but at the moment I think everything is supporting an upward trend for the equities. I think that the gold market very, very exhausted. There's only, it seems to be, the hedge funds are out of it, but markets can certainly turn quickly. But at the present time, the US dollar is advanced again at a basket of currencies, and there's nothing there to really support the precious metal market.
All right. What if the ECB, though, disappoints? Because obviously there's a bit priced in there.
Of course. Well, that can certainly impact the markets, and there's no shortage of those, outliers, that possibilities can happen. But at the present time, I think the unemployment numbers, certainly they're getting a little bit better in the European zone. We're heading into summer. The general consensus over there is still, it's reasonably, it's picking up. There's still a lot of youth unemployment, certainly. But until you see something dramatic happen as far as interest rates rising across Europe and, of course, the US and possibly here, I don't think that's going to really... I just can't see any rocket ship for gold at the moment.
OK. Got to ask you about crude oil as well. It's around that $102.70 mark for US crude futures. What's your outlook for that, particularly given what we're seeing in terms of the shale gas boom there?
The revolution, of course.
The push towards energy independence.
Absolutely. Well, the first thing that I think is that you're heading into that summer driving season, and then you worry about a hurricane season in a couple of months' time. But at the present time, it seems to be so range-bound between that $100 to $104 for WTI. The Brent market's about 108, 109. There's just no volatility, and there's nothing there to really cause any explosive moves upwards or downwards. So at the present time, traders are looking at other markets, and I think that's been demonstrated with equities. You're looking as far as the speculations on inventory levels out of Cushing, Oklahoma. They seem to be a little bit softer than what we expect. And overall, unless you're going to see huge consumption numbers grow or demand increase, I think you're going to still see at these sort of levels. Geopolitically, the world seems to be a fairly cool place at the moment.
Got to ask you about coffee, because there was a lot of fear that your price of your coffee cup was going to go up for
forever.
God knows what. That's right. But coffee has really come off.
Yeah, it has. Well, yeah, it went up around about 55% from December till April at about $2.15 a pound, and since mid-April, it's collapsed 22%. So it's certainly in what they call bear market territory. It's back at $1.70, $1.71. The numbers coming out of Brazil are fairly strong. We've had very dry weather for the best part of 50 years, and at the moment, you're going to see quite a good number as far as crop production. So I think the softness in that coffee market, you'll probably be back to $1.50, $1.60, which is great for consumers, not that good for farmers.
No. Peter, always great to get your thoughts. Thanks so much.
Thank you, Bridie.
Peter.